everybody, it's your girl TJ back with another video. Talks with TJ, aka TJ Two Swoosh Chains. I am rocking the one chain straight off from work, and I just wanted to go ahead and get this video out. Now, it's not necessarily the video I plan to get out to you guys, but it is based on me watching some other creators that I like to, and just want to piggyback off of a topic they discussed on a live, because I have gotten questions before related to what do you think about PayPal credit to buy sneakers, different things like that. So that's exactly what we're going to touch on today. So if you are not aware of what I'm talking about, so Ron Reviews, aka Thru These Eyez, is his other channel. He was on there with Slick50, Where's Your Father, Tony D2 Wild, Skip Goes Hard, AWOL. I think I've mentioned everybody. If I forgot you, I'm terribly sorry. But they were discussing Affirm, Afterpay. These are two different companies that you can go through once you are completing a purchase for quite a few online merchants, and you can use this to pay for an item, and then you handle payments later on. Now, I've given my thoughts before when it comes to using credit in any way to pay for items. It can always be extremely tricky. You always have to be mindful to, if you're using credit, you're not using your own money up front, you are putting yourself in a liability position. And I think I've done a video already, and I will link that either above or below, related to how you can responsibly build credit with sneakers or anything else. And that method of how I break it down is you save a little bit each week or each paycheck leading up to whatever that bigger item may be that you want. And then once you have all of that cash in hand, so it's not a concern of if you can or can't pay for it, you can then use your credit card, pay for that item, build that credit history by then paying in full once the statement arrives. And that way you're able to, like I said, to build a great credit history. You haven't put yourself in a position where you don't have the money to do other things as well, because you're not touching savings, you're not putting yourself in a position where something else could come up and you would need that money. So that is exactly how I would recommend doing it. And this is not the model that companies actually base it on. They expect you to be irresponsible, lack some accountability, to pay for an item on time in full, and that's how they acquire money from you, right? Interest, fees, that's how banks operate to stay in business. It has to do with interest, it has to do with fees. I'm going to suspect that part of these companies are no different. So some people, of course, believe that, hey, this is a great way, great method to be able to pay for sneakers, because of course you're paying for that item there up front. A lot of people are more comfortable dishing out payments a little bit at a time, let's say over 2 weeks, over a month, 3 months, 6 months, versus just paying for something all up front. Now, if we're talking about sneakers, we're not talking about the retail amount, typically, because that can be anywhere from $120 to, let's say, $200, $225 plus tax. We understand we're not talking about retail sneakers, we're talking about resale, okay? So that usually will enter you in the ballpark of $400, and then kind of skyrocket up from there. We know shoes can go up definitely north of $1,000. So let's just get into this a little bit. I'm gonna try to keep it short. First time I tried to film this was not short. So looking at, and I'm only gonna go mostly over Affirm. Afterpay is a little bit different, so just understand that. But when it comes to Affirm or even Afterpay, they are considered point of sale merchants. So once you are checking out for an online merchant, that's where you can actually select their form of payment to pay for that item. It pretty much is an instant loan approval or accreditation for you to be able to go get credit, be approved, and then essentially Afterpay or Affirm, they are paying the merchant actually, so they then enter a contract essentially with the merchant, and then you on the back end have a contract with them. It can be 0% interest up front like Afterpay tells you or advertises, or it can be anywhere from 0 to 15 if you run it with Affirm. Just understand, like, what interest you pay is always going to depend on your individual credit situation, so always keep that in mind when it comes to credit. The terms of payment can be either, I know it's 4 payments for Afterpay, and then for Affirm it can be 3, 6, 9, 12, 24, 36, depending on how big of a personal loan that's taken out. Because that's essentially what it is, it's a personal loan. So once you have done that, you've received your item, pretty much payment has been made up front, and then you start to honor your contract with Affirm or Afterpay to make those payments. Now, it all sounds great, and it could work for people. It could work. But understand that they're probably banking on the fact that it's not going to work for you, because you're going to either just forget that you have upcoming payments and then not be able to pay them, which means you are going to then incur some fees. Now, they can be minimal fees, they can be, interest tacked on after a while if it comes to Affirm, because you're still going to have interest for a lot of people unless you have seller credit, but fees would still be tacked on. And at the end of the day, that is how they are going to make money. It's based on fees, and it's based on the statistical law of averages that people are going to forget more so than not to make those payments on time, or just not be able to. I mean, life happens and things come up, and that's why I say I would just never recommend for myself. I'm not comfortable putting myself in a position where I may not have the money down the line. Like, I could have it today, but 2 weeks from now, 3 weeks from now, if I'm banking on just that money and nothing else for an emergency or anything else that could come up because life happens, put yourself in a very compromising position, because then you do owe someone by law. You need to pay them, and you can then incur a fee. They have the authority, both Affirm and Afterpay, they have the authority to contact Experian or credit bureaus on their own behalf based on your payment history to say, yes, they paid, no, they have not paid. And I'm not sure about Afterpay. I know Affirm has ran into some customer service issues where people have paid in full on time during their term of repayment, and then it was reported wrongly to Experian that they had not. So those are dark marks on someone's credit report they then had to clean up. That's shitty. That's not what you want. Excuse my language, but that's not what you want whatsoever. So I understand that people can want to use this to show positive repayment on their credit report, but there are going to be those statistically that just forget and they don't, or they run into the issue of just really biting off more than they can chew and saying, oh, well, I think things are going to go well for the next few months or the next 4 payment installments, so I will go ahead and charge this $1,000 union, Jordan 1 union or something, use Affirm or use Afterpay, and I'll be good and I can make them. And then something devastating happens, and usually when one domino falls, a lot of dominoes fall. And then if you're unable to pay, what happens? Because 1, they can both report that to the credit bureaus. 2, I'm not that excited about the fact that Afterpay is not really transparent about what occurs after, let's say, the second payment that you have not made on time. Like, I know they're going to charge fees, but what happens after that? They're not very open about that, and it could be mitigation, it could be litigation. They may not contact you directly for litigation. They may actually sue your bank, and then your bank will turn around and sue you, and it can just turn into a world of problems that you can alleviate yourself from being in, I think, if you just are a little bit more cautious. Now, would I myself ever do this? I'll be honest with you, no. I would not, and it's just based on the fact that it's a sneaker. It's not essential to any of my biological systems of life that I need. It is not related to having a roof over my head or food on my table, gas in my vehicle, paying for utilities. That's not what it's necessary for. The shoes are just shoes that we want. Even if it would be going for a flip for me, I'm just not someone that's going to stick my neck out financially or leverage something in any way where I don't already have the cash on hand to be able to cover it. That's just personally how I operate. I understand everybody can be different, and some people will have success with this. Like, trust me, I am not under the guise to think that people won't. People could. If you buy a sneaker, let's say at $400, you make these payments, and then the actual resale of the sneaker skyrockets, so it's dead stock, and you choose to then sell it on StockX. You could make a profit off of that, but everyone will operate that way. Some people will look, I think, to start, let's say, YouTube channels based on that. Would I recommend it? I would not recommend you ever using debt to be able to purchase items to showcase on YouTube for a bunch of strangers. Like, I love all y'all as subs, but it's just not that deep or serious in terms of my life in itself to be able to do that. So, and people may also wonder, like, how is it that, let's say, Afterpay can charge you 0% interest whatsoever? Well, there are some ways that merchants and finance companies will do this, because at the end of the day, just understand, Afterpay and Affirm, they are out to make a profit. They're out to have a bottom line they must meet. So, just one example, there could be a back-end contract with, let's say, GOAT and we'll just say Afterpay, and then there's a contract between Afterpay and you, the end consumer. So GOAT may be okay having a deficit in terms of the products that they're technically selling to Afterpay, since they're the ones that are technically paying. So let's say that contract is 90% of a resale cost of $400. You have to pay 100% though when it comes to Afterpay. So you're paying Afterpay $400, and GOAT is pretty much paying or GOAT is only accepting like $360 back from Afterpay. So why would they take a 10% deficit on that shoe? Because in the long run, you're probably now going to be a long-term customer to them, because they've offered you a different option in terms of pay. If you want to continue to attract more consumers, offer them more options, and options in terms of forms of payment. Think about it. A lot of merchants saw an increase in their business exponentially when they started to offer MasterCard, American Express, Visa, outside of just cash or personal checks. So their long game is to gain more customers and more foot traffic, and hypothetically down the line, you're not always going to use Afterpay or Affirm. So let's just say that you use Afterpay the first time, but that second time you come back, you use just your regular MasterCard, whether it be a debit or a credit card. Okay, that contract with that debit or credit company can be totally different. So now, instead of having to take a 10% loss on that shoe, now they can get 100% back. That's just one way that I think, and I've read, could work for Afterpay, and the fact that they charge you 0% interest. But just understand there is always a potential loss, always a potential threat to you, because you are liable for a payment, and I'm just not a fan of being liable for anything. I'm not whatsoever. Insurance is there. I'm just not a fan of being liable for anything. But it was awesome to hear all of the guys' different their different opinions on it. I think it's awesome to always hear different people's opinions and takes on how to approach different things, especially when it comes to money. So just gave you guys mine. You can let me know in the comments, of course. Have you ever used Afterpay or Affirm to purchase anything? Not just sneakers, but to purchase anything. Because I know people can travel with Expedia using Affirm, different things, Casper mattresses, Wayfair picking up furniture. For me personally, just a sneaker is never that important. It's never a must-have. I mean, I'm on a whole month. I'm not getting sneakers and I'm not hurt one bit by it, and everybody's gonna be different. That's just me. So thank you guys for tuning into this. Don't forget, also, the details for the 5K giveaway are in the description box, so be sure to enter that. You need to comment Budget Life on the actual 5K video though, not this video, on the 5K video. Thank you so much for watching. Deuces.